Hi everyone, welcome to January 25th. This is the sector review for today. And before we get started, this video is for information purposes only. Please do your own due diligence before investing in stocks. Okay, ordered from the percentage change, the highest percentage change to the lowest. Let's go through the sectors. So ITB had a sell-off the past 2 days after kind of this fake run up from this consolidation and a hard sell-off, and it found some buying support at the bottom of this consolidation base, but it still remains in either a sideways or a possible downward pattern now that with the moving averages kind of still pointing down, but in order to get through into a bullish kind of momentum again, we'd have to get through some of this resistance, all this resistance, and fill some of these gaps and start to take these up. You know, just looking at the chart, it looks like it needs more time, so possibly more sideways to come for ITB, or it could also manifest as a island reversal where it opens lower at say 96 and then starts to head lower. That is another possibility for ITB. IYZ is looking stronger. This is the telecommunication ETF. I'm still above the 5-day. And if we look on the weekly, it is above the 5-week as well. So still some strength coming through in IYZ. IYT is transportations, and transportation is also looking good, with continuing this week, first kind of consolidating below the 5-week, but this week holding above it. And on the daily, we can see that the consolidation around the 5-day and a possible kind of run up, but we do have a resistance up here at the 268 mark, and let's check it out on the chart here. Yeah, so we are consolidating right below this weekly VPOC, so taking that out might bring some sellers, and also 267 on here is monthly top of value, which could also act as some resistance. So some you know, on the weekly chart or the yearly value areas, it's a much cleaner chart, but we can see there is some resistances coming up for IYT, and a break above this top trend line around the 269 mark would be an area to start getting interested in that. So marked in green for now, as it is above the 5-week and the 5-day moving averages. Gold seems to have put up a recovery. It's not something to follow very closely on this channel. XLC is the communication ETF. That is also kind of trending higher over here, and I'm sure on the weekly also the trend continues. So XLC looking good here. This can be marked as green as well. XLK still above the 5-week, but it is a bit extended from the 5-week, the tech sector, so marked in yellow. XLU, we are below the 5-week and all these moving averages. A lot of overhead resistance here on XLU, so far marked in red. IYR, that is not being able to take the 5-week, but something to watch is it could be making some sort of a flag or consolidation pattern here. So that could be something to watch on a possible break above this flag on IYR. And I'm just going to put an alert right here. So I'm going to move this to yellow to kind of keep an eye on it if it is flagging over here or not, because it is above the 200-week. It was able to get through the 200-week moving average, and now you know, after this back and forth, could move higher, the real estate ETF. SMH also, like the tech sector, it is a bit extended, so we could see a bit of a pullback here marked in yellow, but the trend still remains up on SMH. XBI is rejected first rejection, then a sell-off below the 5-week, and since that week, last week, we were not able to reclaim the 5-week here. So it is starting to turn lower, although if we move to the daily, yesterday looked like, so if we see this here, yesterday looked like from the lows, this anchored VWAP, yesterday looked like a break of that, and there was heavy volume into the close that broke that support, but today it is so far holding it. We tried to break it earlier in the day, but you know, it needs to hold at 88.23, which is the anchored VWAP support, and also the 5-day moving average. A break of that could mean further weakness coming through in XBI. XLE actually pushing through. We could see that we had a gap up today and a move up. The moving averages are pointing down, and some overhead resistance coming through for XLE soon. So I wouldn't call it in a tradable zone yet, but it definitely has defended this area where buyers and sellers have previously fought. It has defended the top of that area and is moving up from there. So something to keep a watch on and maybe developing. It still remains trend down, but now so far moved to yellow because it has taken up some of this. So it's above the 5-day and today getting above. This is, I believe, the 20-day. So something to keep a watch on how it develops, and maybe with the 200 and the 50-day coming up, we might get some idea if buyers want to push it through further, or the sellers will take control and push it back down. Industrials also looking not too bad here. We tried a break below the 5-day and closed just below it, but so far holding right above it. So XLI looking decent. And on the weekly, you can see that we are above that 5-week moving average. So XLI, along with these sectors, IYZ, IYT, looking decent. The retail ETF not looking that great, closing so far this week below the weekly 5-week moving average, and the 5-day and the 20-day pointing down. So nothing of interest here. RSP, we'll look at S&P. So dollar made a move back today, and you know how there was kind of a false break lower and now a push higher. Another sign, kind of keep a watch on this developing dollar strength here, could cause some weakness in stocks. There is some overhead topping resistance that came through on the 28 mark before for the dollar, which could act as this overhead resistance here. But so far, this false break lower and then rush higher from there is a positive development for the dollar and a negative development for stocks. TLT is the other headwind. The rates climbing a bit higher. Yesterday seemed like we will break down further, but today it's picked up a bit with a gap up because of some economic releases this morning. We had a gap up in the market and also in TLT, which means the rates fell down, but the 5-day is contesting with it. It is not so far being able to close, at least as of now for the day, not being able to close above that 5-day moving average. Consumer staples with kind of just a tight consolidation here, but so far looking like 5-day pushing it lower. Yesterday was a break of the 5-day and closed below the 5-day, but today we, like the other kind of sectors, gapped up a bit, but 5-day still acting as resistance. So nothing great happening on that world. XLB is just another biotech ETF. I think we already went over the biotech stocks. So I'll leave this for now. And SPX, let's see where that is. So SPX is kind of hanging in there. It could be consolidating in time. If we look at the weekly chart, we can see that the trend still remains positive for SPX, with the moving average kind of catching up below. So it's possible that we consolidate in time or we push lower here in price to the 4,800 mark and do a test of the 4,800 to see what is next. That would be the support in the options world, as well as with the 5-week supporting at 4,800. So we could see a test of that with how extended it is right now from it. QQQ, similar type of story. We are kind of stuck between the worlds of the trend lines. We tried to kind of take it at the 429, but sold off from there. If we look on the daily, so we can see yesterday was a test of that top trend line and a sell-off, and today again a gap up but a sell-off, and we're right about at yesterday's close, so flat from yesterday's close at this point, and we could sell off further to the 425, 424 mark, where the 5-day is also coming in to support QQQ. So that could be what is next for QQQ. And kind of if it starts living above this trend line and moving higher, then we could, obviously keep grinding higher here. But a key area today and tomorrow to see how this develops on the QQQ front. We already went through SPX. MDY is in a interesting area, same as yesterday. We closed, a lot of sectors closed just below support, but today there was that gap up. MDY mid caps, it tried to open above that 5-day moving average, and so far it is hanging out above that 5-day or just at that 5-day, but it's still at least above it. So at this point, 5-day acting as support rather than resistance for MDY. So still relatively positive on MDY. Same with IWM, with the 5-day coming through underneath and pointing up. It is supporting it. So still relatively looking a little bit better than some of the other sectors we've looked at, where the 5-day is kind of acting as overhead resistance. IWC also coming through with that 5-day supporting it underneath. But the reason why it is marked as red is that we have this 200-week and the 5-week really pushing through, pushing this down. And until we get above these, we're going to keep that as a red signal on the IWC, the microcaps. And once that pushes through here and we're able to close above it, that's when we can look at positive developments on IWC. IJT is small cap growth. We haven't talked too much about it, but you can see on the weekly we are above that 5-week moving average, although we had a kind of a rush up or actually a gap up to here and a rush up during the day, but we are closing right at that support. But we are above that, right? So it could act as support until broken, and then we're going to start looking at for small cap growth to be downtrending from there. But so far, you can see even on the daily, we have some moving averages supporting that this area. So XLF is interesting. I think we have some earnings today for Visa and a few others after the close, so it might dictate the direction here. But moving above and closing 2 days above 38, that 38 level, which was that heavy resistance, is a good development. The thing with XLF financials is that there is this overhead resistance which could come through. So the moves could be kind of move up but faded. So gotta keep a watch on that in the XLF front. So USD CAD, with the market gapping up, had a bit of a gap down today. So we actually did not gap down. So yesterday we closed at 352. This morning we opened at 352 but sold off. That would be the right way to say. We have this moving averages supporting it and this trend line supporting it right at 347. So that could act as support before a move up on the USD CAD front. But as we saw the dollar kind of developing some strength, but what would invalidate that would be a move below 1.347 here. XLV, unfortunately, so this was one of the stronger sectors to start the year with the breakout in late December, but so far it has kind of, so if you see this consolidation pattern here, there was a consolidation with the moving averages being held, but yesterday we closed below the 20-day, and today we had a gap down here. So you could invalidate that move in XLV until this gap is taken up, and we have a close below these daily moving averages. Then you can start to be bullish again. But until that, it looks like it's possible retest of the breakout area for XLV. So from downgraded from the green to yellow, unfortunately here. XME metals. So nothing great happening in the metals world. We are kind of just in a consolidation pattern with a support right underneath. XLY had a big gap down today because of one of the major components, Tesla, reporting earnings and not doing well. I think Tesla was down 12% at some point. And so that is causing the sell-off in XLY after a tight consolidation resolving lower. And this could then enter into this the tight trading zone here around the 167, 166 mark for XLY. Okay, so that is some of the best to the worst sectors. So let's take a look at some stocks. So IBM pushing through with good earnings and got great buying support today with heavy volume. So this would be a stock of interest. We've marked this as a stock of interest for a while, and we were waiting for the earnings report to come out. It felt a little extended here, but now with it pushing up, we could look at areas to possibly get into IBM. And reason why I really like this is it is coming out of a kind of consolidation that it's been in for like almost 10 years. You can see. Let's go to the weekly. So you can see almost like a 10-year consolidation and finally a move up in IBM. So this move could really sustain for a long time. Could be one of the leaders for the year, and so would look at opportunities to add to this. Shop, nothing spectacular so far. Those overhead resistances on the weekly still acting as resistance, and it might just kind of hold in there until earnings that comes in on the 13th of Feb. Still about 2 weeks to go for that. So Tesla, one of the bad performers for today. We can see what's happening here. We had just a weakness coming through, and then a gap down here with the anchored revap from before. This is all the way from the breakout in 2020. So that was actually the top of the day that started acting as resistance, which is not a really good sign. So we would be bearish on Tesla until 191 is taken up again. All right, and Microsoft actually still looking pretty decent, not too extended here. It could have a check back to either the anchored revap or the 5-day here, but not a bad look on Microsoft. Few others. This is the ITB sector here with Home Depot and a few others. Bit of a bounce up today, but the trend still remains down. Nvidia and the semi is going through a bit of bit of consolidation today, or a slight pullback in this sector. So got to keep a keen watch on to see if that pullback is a deeper one or it sustains. Kind of some of that brings some health into some of this kind of drastic move up that we've seen. That's about it. Some of the leaders from before, like MOD and stuff, lost the 5-day yesterday, and today the 5-day started to act as resistance. So it could be a check back like this, like it has many times before, check back to the 20-day. It likes to do that and run up from there. So that's something to keep a watch on. A break off 20-day would be a kind of bearish reversal sign for for MOD with earnings coming up on 30th Jan. My belief would be, at least, obviously let price dictate this, but would be that the 20-day supports this move until at least earnings, and then we will see what happens. SYK was another leader with the healthcare group weakening. Got to just keep an eye on this with the 5-day kind of pointing down and moving up. It could kind of close this gap and move up into the 5-day. But with this now acting as resistance, this is something to just keep a watch on. It could also want to do a test of the 20-day based on how the market does, but something that can now be moved into a yellow, and same with MOD. BSX is interesting. I think earnings are coming up for that as well. That has also started to live below the with the 5-day, and this kind of speaks to the healthcare ETF weakening. Okay, hopefully that was helpful, and I'll see you guys tomorrow.